How you doing, everybody? Welcome back to Mortgage Mind. My name is Martin Mesa with Rate One Financial. Today we are talking about May 2023 upcoming changes to the interest rates. Okay, so here we are. We're around May 2023, and there's been some hype in the news. I don't know if you've seen or heard about it, but maybe you have. What's going on is Fannie Mae and Freddie Mac, the two big organizations that kind of have the most influence over the actual mortgage rates and consumers get, have announced that they're going to be making some changes with how they price out the mortgages that they buy on the secondary market from all these mortgage companies, which directly affects the actual mortgage interest rate that you get as a homeowner or home buyer, applying for a mortgage. And so there's been some negative reaction to it. A lot of people are saying things that I'm not sure are true because I haven't had a chance to research it myself yet. But I did get a chance to research some of it, and some of it is true. So what I will confirm today is that I just double checked, or I compared both the current system and the system that's going to go into effect on May 1st. And definitely you are going to see people with lower than average credit scores getting better interest rates than they normally would when they are looking to get a loan to buy a house, whether they're a first-time home buyer or not, with very low down payment. Traditionally, people with marginal credit or lower than average credit looking to buy a house with very little money down, that's a risky situation for a lender. Those kinds of loans have much higher default rates, historically speaking. So that's a riskier loan for a lender. There's no doubt about it. And traditionally, borrowers like that, if they could get a loan to buy a house in that situation, they'd be paying a premium for that. They would basically get a much higher interest rate than compared to someone in that same situation that has very excellent credit and has done a very good job at managing their credit in the past. But right now, with the new changes, they've pretty much taken away that incentive to work hard towards keeping up your credit in good standing and keeping your credit score high, because there's really not much of a reward there anymore for that buyer looking for a home loan to buy a house with very little down to keep their credit up, because it's not really going to get them a much better interest rate than that same person in that same situation with really low credit. So that's really true. That is happening. They're no longer, rewarding people for having good credit in that situation for that type of home loan that you apply for. And they're really taking away an incentive for people with lower than average credit scores to get their credit improved to become a better credit risk for a borrower. Because you're not going to get a much better interest rate if you have an excellent credit score versus just a marginal or lower than average credit score in that situation for a purchase with very low down payment. So whether or not you think that is a good thing for them to do, I'll let you decide. I won't say anything about it. I'll reserve my commentary on that offline. But in general, it's always been a lender's prerogative to base price, meaning interest rate that they charge to borrow money from them, on credit risk. The riskier you are as a as a borrower, usually that means you have to pay a premium for that and pay a higher rate. That's general classic risk return, risk reward type philosophy as a lender. They've kind of done away with that. They've gone away from that. So not sure how it's going to pan out. We'll find out and we'll see. But anyway, you may or may not feel good about that change. Maybe it's going to benefit you if you have lower than average credit. Maybe it's going to upset you if you've been working hard all these years to maintain your credit in good and high standing. So we'll see how it goes, but definitely that is going into effect. For sure, that is going into effect. Used to be on the low end of the credit versus the high end of the credit, you could see an interest rate difference of a full 1 percentage point in interest rate. Better for people with excellent credit. But now that difference might only be 1/8 of a percent, or maybe 1/4% higher in rate for somebody with excellent credit versus someone with lower than average credit. So anyway, it is what it is. We'll see how it all turns out. So I just want to let you know. Hopefully that helps you guys. And if you like this episode, please share this with your friends and family, and we'll see you on the next episode of Mortgage Mind. Take care.